What's going on, everybody? Welcome to today's meeting. William Rapp here, owner and founder of exclusiveannuities.com. And it's a pleasure to have you guys on the meeting today. Today, we'll be discussing a general overview of the National Life Group product arsenal when it comes to the fixed index annuity space. National Life Group is one of our top most reputable, arguably most reputable carriers here on the life insurance and the annuity side. They've been in business since 1848. And we love National Life. You know, National Life is a very prestigious company. We've actually had the chance to go to their home office in Vermont, meet with the CEO, meet with the corporate staff, and we have nothing but good things to say. You know, it's pretty phenomenal as well when you go to their headquarters in Vermont. You know, they actually have a whole museum dedicated to their first applications on the life and annuity side that were written back in the 1800s. They have paintings and portraits of all the first beneficiaries, all the first policyholders. And this is a very, very, very well put together company for you to place clients with, for you as clients to place your funds with to accumulate your asset, protect your asset, and build a strong financial portfolio. So, this is their website, National Life Group. Like I said, since been around since 1848, they were insuring people on the Titanic, you know, back in the Titanic days, and they're A plus rated all across the board, and they've been around for 175 years, you know. So today, what I would like to do for you guys is I would like to jump right into the illustration software, give you guys a good overview of their indexed annuity portfolio. I believe they have some great index annuities on the market, and today we're going to jump right into that. So, first things first, we're going to pull up the illustration software here. I'm just going to use the state of South Carolina for an example. Right here at exclusiveannuities.com, we are licensed in all 50 states. If you need to schedule a meeting with us, make sure that you go to our website here, exclusiveannuities.com. And we are MDRT certified. We are Hall of Fame advisors, and we will serve you and put you in the best position we possibly can and go through a thorough intake process with you to find out which annuity products best fit in your retirement profile and portfolio. So my name is William Rapp, owner and president. And here's my business partner, Brady. You can also Executive Vice President Brady Pelser. And, you know, if you ever need to book a call with us, feel free to click on this button right here, speak with an advisor. It will bring you right to my calendar. And we will do a free strategy session with you and work with you as best as we need to and as long as we need to find this as a solution for yourself. So you just go on the calendar there, click a time, put in your first name, last name, phone number, email, any comments. Hey, William, it was just on the website and the YouTube. We want to have a customized report done for us, and we'd be more than happy to do that for you. And you can also go to the YouTube as well. If you go all the way to the bottom here, you click on our YouTube channel, you will see plenty of product overviews, concept-driven overviews, intake previews, and we have a lot of content already on here. And then more content will be on the way, more value for the clients and the customers to best fit your retirement scenario. So back to the National Life Group product arsenal here. The first section, let me switch it over to the indexed annuities, fixed index annuities right here, right? And these are the ones that we're going to focus on first, okay? So two main products on the accumulation concept with National Life Group here. So we have the growth driver, 7 and 10. And then we also have the Zenith growth, 5, 7, or 10, both accumulation type products. And then we have the Zenith income. We'll dive into that later, and also the income driver as well. So first and foremost, we're going to focus on the growth driver and the Zenith growth. Very, very similar products. This one, as you see, the growth driver is an FIA with a bonus up front. So the bonus goes right into your accumulated value day one inside of the policy, right? Which is a cash bonus up front that enhances your accumulated value day one in the contract. And I'll explain, the differences between taking a bonus and not taking a bonus. With the proper strategy, sometimes it's the best to take the bonus. Oftentimes it's not. I'll explain how the rates change when you do take a bonus and so on and so forth. So here's the first page. We put in a basic, put in a 60-year-old female, right? Just for an example. We'll use it as non-qualified funds, non-qualified, qualified, depending on what you're looking to place in the annuity. And then the next thing we'll go to here, guys, is funding and withdrawal. So very straightforward annuity, very straightforward product. And we're glad to go over it with you today. So on the illustration software, this is where you design the product itself, okay? So you have the growth driver, 10. You can also do it in a 7-year chassis or a 10-year, right? There is a 10% premium bonus up front to the policy. So for an example, I'm going to put in just a premium amount of $500,000. This is a single premium annuity, which means you do all the planning up front. As far as funding, you cannot put any more funding into it after the fact. They do have products with National Life Group that you can contribute into monthly as well after you do the first month or first year contribution. We'll jump more into that in a second. So the growth driver, I'm going to put in a premium of $500,000, just show you the concept, show you the strategy and the functionality behind the product itself. As you see, the first year fixed rate as of today, July 28th, 2024, is 3.25%, which means you can allocate a portion to a fixed strategy on the year-to-year, point-to-point crediting method that occurs inside any FIA. Usually it's always a 1 or 2 year point-to-point, which means if your money checks in on today, 1 year from today, whatever the index does, you get a credit for it back to your principal. Now, there's no fees in this particular product, and I'm showing you the declared interest rate of 3.25 because you can get into a 3.25. You want to allocate 20%, get some sort of guaranteed interest back. You can always optionally put your funds in that allocation or a portion. Now, what we like here is the S&P 1 year point to point. That's the S&P 500. Was at 8.5% cap with 100% participation. We argue that whenever a cap is around those numbers, it's a competitive cap. I'll show you the difference on the next product. Their S&P cap would be a little bigger because there's no bonus up front. So for an example, just for simple math, I'll put 100% in the S&P 500 strategy. You can also do an S&P monthly sum, which is 1.9%. You can get credited monthly. And then we have our proprietary indexes, the Global Balanced Index and the U.S. Fundamental Balanced Index as well, both with strong participation rates of 140%. And that means that they don't place caps on those strategies, and this applies to any product that you would really look at, right? National Life Group or not. Whenever you have a cap, for example, the S&P 500, 100% participation, right? You're getting up to 8.5. So if the S&P 500 does 10, you're getting 8.5, okay? Now, for these ones, the proprietary market volatility control indices, right? They're not as volatile as a pure S&P 500. So instead, what most companies do is they don't give caps. See, there's no caps. You just have participation. So if this index were to create a 10% return, you would get 14% on that crediting year because your participation rate is 140%. So typically you'd want to blend in, right, between the 1 year allocations. You can also use 1 year rate booster index strategies. They come with some sort of annual charge as well, which we're not always going to do that. Rarely are we going to take an index with a charge because the rates are already good as well on the regular allocations. But if you see, for example, your S&P 500 point to point with the charge, you have an 11% cap. Okay. On the one without a charge, you have an 8.5% cap. So not always going to take a rate booster charge. You can also do a 2-year point to point strategy and so on and so forth. For this example, and for most of our client sessions, we're going to recommend doing 1-year point to points to keep it simple. That way we can reallocate the indices every year if we need to, right? Because you can reallocate these indices right on your customer portal. And sometimes we can do that for you and definitely do it with you on an annual basis to make sure we're allocating in the most proper strategies that we could possibly can, right? With the S&P 500 here with 500,000 going in, right? Is where we would place this particular account, for example. So we're going to go over here to the quick view, guys. And the quick view is going to show us a general outline and overview. This is the hypothetical return scenario based on the last 10 years, right? On the S&P 500, a pure index, actual data going back. And we're going to look at the growth. So you see, first and foremost, your 10% premium bonus off a $500,000 premium would be $50,000. Okay. So your $50,000 premium bonus gets applied into your accumulated value year one. And then very straightforward annuity. This annuity is, very straightforward. It's an accumulation point to point index account, index annuity with no fees, 10% free withdrawals starting on year 2. So you're going to see your accumulation value, right? You're going to see your cash value, which is your surrender value within the first 10 years. You'll see your premium bonus. You'll see your premium that actually went in. And you'll always see, guys, that your accumulated value right away will be equal to your death benefit. So if, God forbid, you put your funds in and you die on year 2, whatever your account value is what's going to pay out as the death benefit, just so we can make that clear. And then the next thing you'd want to look at, what I'll do for you guys, is I will pull up the actual report here for you. And we'll go through the actual report and I'll show you exactly how it looks. So let me scoot back and share my screen again. Here is the general overview of the illustration itself, right? With National Life Group. You're going to see your diversified allocation strategies using 1 and 2 year strategies. For this one, we did a 1-year point to point on the S&P 500. You can see the declared rates here on here, which is your fixed rate. This highlighted yellow greenish looking column is the allocation that we put 100% of the funds in, which that's we could change that based on our intake process with you. Figuring out the best allocation strategies here at Exclusive Annuities. That's what we would do on a strategy session over the course of time, meeting and, working with the client's portfolio. We best guide you on what are the most proper allocation strategies per annuity that we would look at. So you see all the allocation options. You see 100% here is going into the S&P 500, right? And then right here, guys, is where you're going to see the guaranteed elements. So every company, like I always say, is going to show you a guaranteed version ledger of the illustration showing 0% annual returns all the way through, right? So the 0% return scenario basically means that you can never go below 550,000. So if you go below 550,000, you cannot, right? There's these FIAs, index annuities, they're principal protection type of accounts. So if the market goes backwards or negative or has flat years, you put in 500,000. The worst case scenario is that your account could only be 550,000, and the chances of us getting 0% market returns over the course of a 20, 30-year period is very slim. They just have to show this version of the allocation to best suit the legal component of this is what is contractually guaranteed in the product itself. Okay. So the next thing we'll look at is the 10-year index growth scenario based on the S&P 500. Okay, the S&P 500 on this product, remember this is the growth driver 10. This one has, you know, a 10% premium bonus and an 8.5% cap on the S&P. So your assumed premium's 500, your premium bonus is 50, your annual effective rate, right? All the way through is going to show you how the S&P 500 has performed in the last 10 years, and they're going to project into the next 10 years to show you how this would look. And very straightforward, point to point, year to year. You see the first year on the look back, we got $46,750 in accumulation, which was added to the account value year one, plus the premium bonus. And then very straightforward, there's no fees in the product, and you have 10% free withdrawals every year starting on year two. And we like this product. There's not a lot of bells and whistles in the product. Premium bonus up front, growth potential, no fees, 10% free withdrawals, you know. And the death benefit here obviously is the same as your accumulated value. So you just see the steady growth and rate of return all the way back, you know, on the S&P 500, exactly how it's performed in the last 10 years. And based on the hypothetical look back, we would have turned this $500,000 based on S&P 500 performance to $1 million plus within that 10, 11-year period. So this is the growth driver 10. It's a very straightforward product, 10% premium bonus up front. Allocations are there for you to choose from. And then we have 10% free withdrawals and no fees in the policy itself. So that's what we would look at here with the growth driver 10, assuming that it was a good fit in your retirement portfolio. Next one we'll go to, guys, is the Zenith growth for accumulation. So the Zenith growth for accumulation right here comes in a 5, 7, or 10-year chassis. Okay, and I'll do the same overview on this product, and I want you to pay attention to the differences between the growth driver and the Zenith growth, right? Not much of a major difference. However, you'll see that when you do not take that upfront bonus, right, your rates are generally higher inside of an annuity contract. So your S&P 500 point to point on the Zenith growth over here, Zenith growth, is 12% instead of 8.5%. So I believe that non-bonusable products on the long run will perform better. However, there's a couple ways to look at that. If you like the upfront bonus, just make sure that you understand that on the back end, you want to get the most competitive rates possible. And with this non-bonusable product, you'll see that the rates are better, right? 12% cap, very, very competitive on an S&P allocation in the FIA, fixed index annuity space, and 100% participation. And you'll see the other proprietary indexes that we were using on the 1-year strategies is 205% as opposed to, you know, the 140% participation rate we looked at on the last product. And then your declared interest rate's 4%, right? So if you want to allocate a portion to the fixed allocation, which we can always do that, we can always do 20% in the fixed, 80% in the S&P. Listen, whenever your S&P allocation is this high, 12%, it makes the most sense to take advantage of that, especially if we're discussing the S&P 500 itself. You know, the S&P 500 index and an FIA, those caps range from 5 to 12%, this being one of the higher caps we've seen, right? And you can also do a 2-year point-to-point cap, which is 30% on the S&P allocation but that means you just have to wait 2 years for your credit to be applied to your principal. Some people like that, some people don't. To each his own. And we discussed that and find a flavor for you on that client strategy session. And like I said, if you need to book a session for a customized report, make sure that you go to exclusiveinnuities.com. You can go right to the top here, speak with an advisor, and we will walk you through exactly how this or many other products could fit in your portfolio here at exclusiveinnuities.com. So back to the illustration software, you'll see that very straightforward. No fees in this product, 10% free withdrawals every year starting on year 2, no bonus up front, and the allocations are somewhat competitive from an index standpoint. And we really like that about National Life Group. We really trust National Life Group with our business. National Life Group is one of the top, most prestigious companies here in the United States, having been in business for 175 years with A+ ratings all across the board, phenomenal company history, and a good reputation for financial security. So, National Life Group, one of our top go-tos. This is the Zenith growth for accumulation. You'll see that I declared 20% of the allocation to the fixed bucket, which is 4%. And then I put 80% in the S&P, which is 12%, right? And that's exactly how we would diversify across the board in this strategy. So if we scroll down just a tad, you will see that the guaranteed ledger is going to show that you never lose principal, because on a 0 or negative years in an FIA, you're principally protected. Your principal is contractually protected. It can never go below a 0 credit, right? And because I have a portion in the fixed bucket, we actually are getting growth on the guaranteed ledger, okay? So that's the guaranteed. And then very straightforward, we go down to the most recent 10-year index growth scenario, and you're going to see that your accumulation value is just continuously going to go up over time, right? Very straightforward, not a lot of bells and whistles. You just choose between the bonusable product with a little lower rates on the growth driver, or you choose between the Zenith growth with no bonus up front and more competitive rates on the back end and front end. So constant rate of returns all the way through. We can get up to 12% on the S&P 500, which is very a good of a rate. And you have that 10% free withdrawal provision, and there's no fees. And after 10 years, you can reposition the product. So if we reposition the asset, right, and exercise control of the asset over that time period, right? So if you go down to year 11 here, you'll see that we have this asset at 1.1 million, right? We put in 500 based on the historical look back on the S&P. We doubled the asset over time. So very good value proposition there from National Life Group. I also like to show this one other way as well from a withdrawal standpoint. If we go down here to the free withdrawal provisions, right? And say you want to schedule out withdrawals in the annuity, and you want to do that from let's just say year 3 to year 15, right? And say we just want to take 5% free withdrawals off the top of our account every single year, right? Or we just want to specify an amount of, say, 10 grand, 15, let's just say 15 grand a year, just taking interest off the top as income, not touching the principal, right? This is a good way to illustrate what we like to call a flex account. So the flex account here will allow us to take distributions on a distribution model and never touch principal. So you can exercise this from the standpoint that you never touch your asset itself, but you could take those free withdrawals of up to 10% a year off the policy, right? And I'm only illustrating you taking 15,000 a year as income, right? And if you see that you do that starting on year 3 all the way to year 15, you still have $1 million in the asset itself, but you took out 195,000 in income, right? So best way to create that income for yourself through a safe alternative would be this type of strategy. You know, we also have income type products with National Life Group and many other companies where we can give a contractual income, trade the asset for contractual income, but you can also do it this way on an accumulation channel, such as this with National Life Group and many other companies that are favorable in this regard. So this is taking interest off the top on a flex account strategy, something we really like to implement here with exclusive annuities, protecting the asset as much as necessary, getting into contracts with the highest possible rates and the highest possible contractual guidelines, and making sure that that's a transparent process for you. You understand exactly how it works and you understand the mechanism and how we can fit this particular strategy in your portfolio moving forward. So, safe alternative here with National Life Group, right? And we really, really like this product, this company, this fleet of products available through NLG. Next product I'll go over with you guys. Now, instead of the accumulation concepts, we are shooting over to the income type products, both fixed index annuities, FIAs. The first two I showed you, Zenith Growth and Growth Driver, those are for purely for accumulation, right? There's no fees, 10% free withdrawals. Growth Driver has the upfront bonus, lower caps, right? Zenith Growth has no bonus, higher caps, right? Now, what I'll show next is the income driver, right? Income driver is their fixed index annuity with an income rider attached, right? So you can turn the asset itself into contractual income, and we know exactly what the income will be based on specific riders that we can attach to the policy. So I'm going to do the same thing for 500,000. This is be a type of product where there potentially might be an income gap in retirement, or you just want to shore up your income on top of Social Security and a pension. You're not too concerned about leaving the asset behind or preserving the asset. With these type of products, we have the longevity of the income over time, which usually, depending on how long you live, pays you a lot more than the projected 500,000 you would put in here over the course of time. Think transfer of risk, long-term income that is on a contractual basis. So you'll see here, same concept, 500,000 going in. The rates and crediting strategies apply to your accumulated value, not your benefit base column, which is more relevant in this type of account. So we'll keep 100% in the S&P 500. And then the next thing I want to show here is you could take the income rider without a charge or with a charge. Okay. So the difference between the guaranteed lifetime income rider, which is the GLIR, when you take the rider charge, it gives you a 25% bonus upfront to your income value account, right? And then every year you defer income, you don't take income, you get a 10% simple roll-up credit to your benefit base as well, which allows you to create the contractual income based on how long you're going to wait to take it. So the GLIR with a charge is going to charge the fee, right? To your accumulated value, not your income, has nothing to do with your income. It's actually what's going to contractually guarantee a higher income for you by taking the charge. And you can turn that on or off, which the main difference with the GLIR with no charge is that same concept. If you defer income, you're going to get the 10% simple roll up to your income value, but there's not a 25% bonus up front to the benefit base column, which is where your income is being calculated from. So different strokes, different folks, different strokes, right? So, some people are going to want to take that charge. If you do take the charge, the way it looks is like this, right? So your 10% roll up rate with a 25% benefit based bonus, triggering income. Let me scoot down here. I'm going to actually solve for someone taking income right away, year 1 through maturity on a guaranteed basis for single. So you can do single life level income, which is a level payment, doesn't change. You can do single increasing, which means it just goes to you and it starts a little lower and it goes up over time. Or you can do joint, right? Joint level, joint increasing if you have a spouse. And if you pass, those contractual payments will go to your spouse for the rest of their life. Or you can do joint increasing, right? So here we're just going to look at single life level, right? And I'm going to scoot over to here. And we'll see the 25%. I took the one with the charge, by the way, first to show you. 25% benefit-based bonus, 10% roll-up. You trigger income right away. And this is what it looks like. Off of 500,000 on the guaranteed ledger, these numbers do not change. So on the guaranteed ledger, if you turn 500,000 into you turn 500,000 into $32,000 of income every single year contractual for the rest of your life, right? And that money comes off of your benefit base, right? The fee, I believe, of 1% comes from your accumulated value. And as you see, even when the accumulated value is gone because you're taking income, right? And the fees being deducted, the accumulated value is also getting credits on whatever the indices or indexes perform at. So the accumulated value goes up, but it's also being hit with the rider fee, and you also have the income coming out. So you'll see that it will go down over time. But remember, this is a contractual lifetime income type of product. People that are not too concerned about preserving the asset itself, because the income over a 20-year basis, right? You put 500,000 in, you see in 20 years, this client would have withdrew $643,000. So longevity of income is what we're shooting for here. And then on the non-guaranteed, it's the same thing because this is a contractual payout. So on the non-guaranteed, if the indexes do well, you'll see the accumulated value last longer over time. So the better the indexes perform, the longer you have an accumulated value, which your accumulated value is relevant usually to two things. Your death benefit. So if you pass away at age 70, whatever's in the account value will pay out as a death benefit. And also when you're in income phase, if you go into a nursing home, or some companies have chronic illness where if you can't perform 2 of the 6 daily living requirements, right? They'll double the income for up to 5 years as long as you have an account value. Okay, so the account value has to be there for those benefits to be there. After a certain amount of years, as you see, if you live to age 99, you would have withdrew 1.25 million in income. There's no asset itself left, so there's no death benefit. So you only reserve those nursing home and death benefit features for usually, I would say, 10 to 16, 17 years in a policy like this, right? Anytime you're taking an income rider and it looks like this, the asset itself will be gone over time. Some people like it, some people don't like it. Again, at exclusive annuities, we would help you identify that. Sometimes it's good for a portion of your asset to be in this type of product. But like what I showed you on the last illustration, which was you using a growth and accumulation product and just taking income out as you go off the top of as interest, right? You can also do it that way. But that's straightforward. It's a contractual income. It doesn't change whether the market goes up or down. And sometimes it's a good fit. So this is the income driver with National Life Group, right? And I'll show you a quick example real quick. If you were to defer out 5 years, so say we're going to defer out 5 years, right? And I'm going to get out of this illustration and just show you the main difference here. on when you and most of every company has products like this. This is where it becomes competitive in the income space. Is some companies will beat other companies' contractual income payouts. So arguably, there's more competitive companies out there for this type of product. Usually we can find clients the highest contractual, well, not usually, all the time, we can find you the highest contractual lifetime income rider available to you if this is the type of policy that we see fit for your portfolio. And so if you go down to the guaranteed ledger, right, nothing changes. So on the non-guaranteed and the guaranteed, you'll see 500,000 goes in, 25% benefit based bonus up front. Every year you defer income, you're getting 10% roll up credit to your benefit base. And if you trigger income on year 5, where it's highlighted here, you'll see your annual lifetime income instead of 32,000 now will be 48,000. Because again, it's a contractual roll up credit. That's what determines your income. Everything's contractual when you take a rider fee. Okay, guys? So rider fee, good or bad, they give you a contractual guarantee. The asset depletes itself over time, but you're on the hook for the income for the rest of your life. On the guaranteed ledger, it's 48,563. On the best 10 years, it's the same thing. There's products out there that can increase your income as market does better, right? You can refer back to my YouTube and I go over a few products like that. And we can also schedule a strategy session with me, William, on exclusiveannuities.com. You just pull it up, you see the button, speak to an advisor, brings you right to my calendar, and we'd be more than happy to sit and do a customized report for you. So that's National Life Group Income Driver 10. Now, let me also show you what it looks like if you take the same product just without the fee, right? So if we want the chart, the rider without the fee, same rules apply in a sense, but you're just not, the income's just going to be lower because you're not getting the 25% benefit-based bonus up front. So that's what you forfeit when you go without the fee. Your income's going to be a little lower. I'll show you the same version, right? I'll show you the same exact illustration here. So 500,000 going in. We did not take any fees. So now there's no fees in the product, which is optional with this product. Take a fee or not. You take the fee, you get the 25% roll up or 25% benefit based bonus, 10% roll up with no fee. There's no benefit based bonus. You're just getting your 10% roll up. So it's still contractual. You're just not getting a boost to your benefit base up front. Okay. So if I scroll down on the save 5-year deferral, you'll just see that there's no fee coming out. So the income is just a little lower. It's 10 grand year or lower. So this is for somebody who maybe wants to turn income on and off, right? If you want to turn income on and off, then sometimes you might want to settle for a little less income and not take the fee and preserve the asset by all means necessary. Like I said, this is usually one of the last resorts we typically use for a client. Has to make sense. Like I said, some clients look at it and say, this is great. Other clients say, I would never trade my principal for income. To each his own, and we help you identify that during your retirement process here at Exclusive Annuities. So that's the income driver with or without the fee, taking the income right away and then deferring 5 years. As you see, you deferred 4 years here, took income on year 5, and it's still a contractual income. It's just a little lower because no benefit-based bonus up front. You're just getting the 10% roll-up credit to the benefit base itself. Last two products I'll go over here with National Life Group is the Fit Secure Growth. Now, this is a flexible premium annuity. Everything I just showed you prior is single premium. You can't make contributions into it after, but this is the Fit Secure Growth, FIA for accumulation. Excuse me. So this one, very similar to what we looked at in the beginning. You could just add more premium as you go, right? So your rates are very competitive with this one. The S&P 500 is 11% cap, right? You can add more funds into it as you go, annual, semi-annual, even monthly contributions. And you can do that for as long as you want to, right? You can even just do it for a couple years, say 5 years, 2 to 5 years, we'll put, and we'll just put in, hey, you want to put in, 5 grand a year on top of the 500,000. There's plenty of ways to structure that. So basically, what we would do in this scenario is we would actually allocate to the same strategies, the S&P 500. Yep, so you could put 5,000 a month in a year, semi-annual, annual as you go. And it's going to look very similar, guys. So basically what happens is same thing we looked at on the growth driver. This is the fit secure growth. Main difference is it's flexible, right? Flexible premium means you can put more money into it as you go. And we like this product as well. It's a good product on the flexible premium. Even if you're younger and you like these type of products, right? You can basically have an annuity that you can contribute into monthly, which is good. And basically you'll see the same concept here, right? So 505,000, 500 plus the 5,000 on top of that. And then we have the schedule 5,000 going in. Just gives you more flexibility as you grow the asset. And then same concept, just flexible as you go, right? So we really like this for clients that want to make contributions into their annuity instead of doing everything up front. This is also another popular option with National Life Group. So this is the Fit Select Income, same concept as the income driver, only it's flexible, right? So what you could do here, guys, is you could still do the same 500,000 and you can build up that contractual guaranteed income over time, right? On a contractual basis. So I'll show you what it would look like if you took the income, if you contributed into this for 10 years, or you just did all the planning up front, and then you took the income, starting on year 10 of the policy on a contractual basis. So these are the two options that you have. The first one here is called the GLIR Max Bonus. The GLIR Max Bonus provides a one-time activation bonus that scales up your payments when you are ready to start receiving income. And the activation bonus effectively increases the amount of income you receive on the back end. If you are focused on receiving the maximum income in your retirement, the max bonus might be for you. So the long story short here, the max bonus gives you the upfront bonus, and then it increases your payout later. Where the split bonus, right, gives you a 5% immediate interest credit to all premium payments made in the first 8 policy years. So the one-time activation bonus scales up your payments when you're ready to start receiving income. If you're focused on boosting up your accumulation value and receiving lifetime income, then the split bonus may be for you. So one is accumulation focus. The max bonus, that's more for income later down the road. So I do like that one better. So if you see income coming out on year 10 with 500,000 going in, right? You see that contractual income is 62,000 a year, right? On the 10-year look back. And we can also pull up the report really quick, and I'll show you exactly how this illustration would work per se. So a couple different neat options here with National Life Group. I do like these products a lot. This one's a little different because it is based on interest credits in the market, right? So you see the difference between actually you see the difference between your premium going in on the guaranteed ledger. If we get 0% returns all the way through, that income's only contractual at 34.5, right? So in this type of product, there's more of a market performance requirement for that income to be where we want it to be. So if you see on year 10, on the 10-year look back, it looks great, 62,000 a year, but it's based on index performance to a degree in this type of policy, right? So that is exactly how the income Fit Select Income product works here with National Life Group, right? So we went over a lot of products today. We went over every single product inside the, National Life Group portal. And I'll just split this over to the split bonus, just show you guys how that looks really quick. And let me just put in, 5,000, let's just say 5,000 a year, just to see how that bonus is applied to your credits in the interim when you do trigger the income rider, right? So the income market, guys, is very competitive to a degree. So when you do actually, you know, shop these contractual incomes, it's very important to shop the highest contractual guarantees. That's why we would always suggest, you know, booking a call with us. So your immediate income interest credit on this one, right, would be, well, anything you paid in the first 8 years would get a 5% of net premiums paid in the first 8 years. And same concept, your annual lifetime withdrawal, since I have it designed the same way, would be contractual. See how the income's a little lower on this version? So income's a little lower on the back end, right? Because they're crediting up front instead of on the back end. So that's what you need to know about this particular product, the Fit Select Income. And these could be alternatives for you in retirement, between any of the products that we went over today. Again, my name is William Rapp, owner of exclusiveannuities.com. MDRT certified and Red Jacket Hall of Fame annuity advisor. So if you need to schedule a free call with us, like I said, make sure you go right to our website, exclusiveannuities.com. Speak with an advisor, speak with me, speak with Brady, speak with anyone that you see here. And we'd be more than happy to help you and guide you during your retirement journey, and make sure that you also look at the YouTube as well, right? This video will be uploaded shortly, and it's been a pleasure connecting with you all today. I hope you guys enjoyed the recording, and it will be on YouTube soon. If you have any questions, visit exclusiveannuities.com. You guys have a good day. Bye-bye.